glad that we had an opportunity to collab and provide this amazing educational product to everybody that can witness it, right? So a couple of things that we're gonna cover today is we're going to do some myth busting about the real estate industry, about the mortgage industry. We're going to talk about down payment assistance. That's going to be one of the biggest takeaways from today. But before I can really get into that, I just kind of had a question for everybody that was here today. If you had to say when it comes to buying a house, what do you think is the most important number? And if you want, you can just type it in the chat or just keep it in your head. Some people might say it's the credit score. Some people might say it's the interest rate, the closing costs, or the LTV, which means loan to value. That essentially means how much money are you putting down as opposed to how much money that you're actually going to be financing. So I would argue that while all of these are vitally important to the mortgage process, I would say that I would disagree that none of these are actually the most important number. I would venture out to say that the most important number that we have to consider when it comes to you buying your first home is actually going to be your debt to income ratio, right? So the debt to income ratio is essentially a number that is made up as we analyze your income across all of your debt. Now, when we say all of your debt, we're not talking about like your light bill, your phone bill, stuff like that. We're talking about things that you actually had to submit your social security number for. So your car payment, your student loans, any personal loans, credit cards, things of that nature. All of those numbers are going to have a monthly bill that's going to be attached to them when we pull your credit report. And what we're going to do is we're going to add up all of those numbers so we see what your total monthly debt is. And then we're going to do the same thing with your income, and we're going to analyze what your monthly income is. Now, basically, it's debt divided by your income, and that's also going to include your new mortgage payment. So the reason why this number is so important is because your debt to income ratio is going to. Uh-oh, somebody said something. Yeah, just for now, if everybody can just mute real quick, I'd appreciate it just so we can get through it. All right, so your debt to income ratio is actually the qualifying number that's going to determine how much money you can afford to borrow, which means how much money that you can afford, how much house you can afford to buy. So your debt to income ratio can be the difference between you purchasing a $300,000 house to a $400,000 house. If we look a little bit closer at this, you're going to see that the debt to income ratio also is going to determine, if you're in the market to buy, the difference between what type of neighborhood that you can buy in. And if you're like myself or you're like Ms. Beatrice and you have a family, these things become crucially important. So you want to take into consideration what your DTI actually is. So on the screen, I have a quick little example of how it's broken down. So let's just assume that you have a car loan, a personal loan, your credit card, student loans, and your monthly mortgage payment. So if, let's say, for your car it's $800, you have total monthly payments on all your personal loans that come to $400, credit card bills on a monthly average that come to $300, student loans that you're paying $200 a month on. And I know most everybody is either in forbearance or just for an example, right? And let's say you want to buy a house and the new monthly mortgage payment comes to $2,500. Now, assuming that you're making about $4,500, you're going to see that your debt to income ratio is going to be a little over 93%. Now, for most programs and most products, they were not going to allow you to have a DTI above 50%. For the DPA program that I'm going to be talking about here in a little bit, the max DTI on that program is going to be 49.99. The way that we remedy this is that we can either do one of two things. Either we can pay down some of the debt, or we can have more income shown on your file. The way that we pay down debt is we're going to look at what's going to be the most financially advantageous way for you to do this. If we're going to have more income added to the file, then that means that there can, maybe there's a co-borrower. And a lot of people kind of get squeamish when you start thinking about having a co-borrower on your loan, because a lot of people say, well, I don't really want to have anybody else in my business. I don't really want to have anybody else living with me. And that's totally fine. Because what you may not know is that there's also something called a non-occupant co-borrower, right? That's essentially somebody who is going to come into the loan, but they're not obligated to move into the house with you. I've done this for dozens of clients over the past 8 years. It really makes a difference. Okay, so that's just a quick synopsis of what we're looking at when it comes to the DTI. We're going to talk about a couple of more mortgage terms here, just so that I can put in perspective when we're talking about the advantages and disadvantages of down payment assistance. Okay, so when we're talking about some of the mortgage terms, key things as a first-time home buyer you want to consider is the down payment, the closing costs, and cash to close. These are all three very different items that go into your mortgage, but you're going to have to understand what they are in order to see the true advantage of a DPA program. So let's start with the down payment. For simple numbers, if you're buying a $100,000 house, you put $20,000 down, that is your down payment, right? The down payment is what you're putting down on the loan amount to secure that mortgage. The closing costs. The closing costs are all a summation of all the fees that are going into that are being charged to your file. So your attorneys are going to have a fee. You're going to have homeowners insurance that you have to pay for, property taxes, set up your escrow accounts. All of these things go into what's called closing costs. Any fees for any third-party elements that touch your file that have a fee, that's going to be what your closing costs are. Now, cash to close. This is very different from the other two. Your cash to close is your bottom line number. Cash to close is down payment plus closing costs all together. All right. So it's really important that we keep those things separate. I want to swing back around the down payment real quick. So when it comes to the down payment, it's going to be dependent on what type of assets that we can get verified, and I can do a really deep dive on types of acceptable assets. I'm not going to do that today, but essentially, if any assets that you have that have been liquid for at least 60 days. Okay. All right. Now, when it comes to down payment assistance, these are some of the major down payment assistance programs that are out there today. We have the South Carolina Housing, we have the Palmetto Home Advantage, the Chenoa program, and we have Within Reach. And all of these are extremely powerful down payment assistance programs. However, they do have some limitations. So some of them some of the limitations that these programs have is that they're not really giving you down payment assistance. They're giving you a secondary loan, right? So if you're putting 3.5% down, then that means you're borrowing 96.5%, and then you're having a second loan at 3.5% to cover your down payment. Some of the down payment programs listed here come at a cap, so you cannot get any more than X amount of dollars from that particular fund, which can be limiting if you need more to cover your down payment. Some of them also have what's called a residency requirement. So you may be required to live in that house for sometimes 10 or up to 20 years before you can bypass the requirements of these loans. And it may not seem like a big deal, except when it comes to the part where you are now looking to either sell the house or do a refinance. So let's just say, for an example, you want to you buy a house and you use one of these programs and they offer you $10,000 in down payment assistance. Now we're coming up on year number 3. The equity in the market has really done you a true justice, and you want to get your hands on some of that equity. Where it's going to hurt you at is that $10,000 that you borrowed now has to be paid off. So assuming that whatever, if you wanted to pull $50,000 in equity, well, that number now has to go to $60,000 because you have to pay off the money that was given to you by any one of these programs so you can do the loan. you're literally borrowing against your own equity more than you really need to. So that's just, and you also may see some terms like, or it may be a forgivable or something like that. Just because it's forgivable and just because there is no payment on that DPA fund does not mean that you do not have to pay for it in some type of way. Just like I said, when it comes time for you to either sell the house or refinance the house and you haven't done either one of those, or it hasn't been 10 years yet, then you are going to have to repay that full down payment amount at the time that you close on the refinance. And that money is going to be added on top of whatever amount of equity that you've already worked hard over the years to acquire. Now you have to give up an extra amount of that equity to give back to the lender because you borrowed that money. You didn't, it wasn't given to you in a grant or anything. So what I would like to offer is a down payment assistance program that I have exclusively. The Blue Dawn Financial Group Down Payment Assistance. This is a quick matrix that's. I mean, I'm going to explain what we're looking at. I believe it's one of the most powerful down payment assistance programs on the market right now because, for one, there is no secondary lien. I'm not offering you a secondary loan for your own down payment. I'm not offering a forgivable second, and I'm not requiring that you have a 10-year residency in the home. The down payment assistance fund that I'm offering comes as a grant. It is offered to first-time home buyers. It's offered to people in the medical field. It's offered to police personnel, teachers, medical personnel. Excuse me. This program is pretty much available to anybody that's a first-time home buyer. And also on top of that, I'm able to offer more money based on the purchase amount than the other programs offer. I believe in Berkeley County, the maximum loan amount for an FHA loan is $632,500 is the maximum amount that you're allowed to borrow if you're in Berkeley County. So that would mean that I can offer you up to $22,137 in down payment assistance. Now, I'm going to swing back around to one of the terms that we talked about in the last slide. When it comes to the down payment, yes, that down payment is covered, but remember what I said. Down payment plus your closing costs equals cash to close. Just because your down payment is covered, you are still going to be required to make up your closing costs. Now, this is usually where the realtor and I have a conversation. So if you were a client and Beatrice brought you in front of me and said, "Hey, we got the down payment assistance, but we need some. We don't have anything for closing." Now we can negotiate closing costs paid on behalf by the seller into your pre-approval and thus bringing it into your ratified contract. So let's just assume that you have to bring $10,000 for a down payment and your closing costs are an additional $6,000-$7,000. Before we even go under contract, your pre-approval is going to have a contingency written at the bottom that this pre-approval is contingent upon $7,000 in seller credit. And Beatrice, she does a really great job at negotiating this stuff. She's going to be able to go to the seller and negotiate this clause for you. Now, we may even get more depending on what the seller has going on. So it's just definitely worth asking and worth having that conversation with me and with your realtor to make sure that you are getting all of the funds needed. So down payment, I got you covered. Closing costs can be negotiated. And then it is very, very possible that you are coming to closing with very little amount of money. I actually had a client earlier this week who closed on a house. We were able to get her over $10,000 in down payment assistance. We were able to do this exact game plan. This exact strategy just happened in real time. She was able to get an additional $7,500 in seller credit. And by the time her final numbers came down, she only had to bring around $1,500 to closing. So this is happening. This is real, and it's available to anybody who can reach out to me so we can get their hands on it, right? Couple of restrictions on the down payment assistance matrix that I offer is I need at least 2 scores of 580. Okay. So keep in mind, if you're looking at Credit Karma or you're looking at some other credit monitoring service, then you are going to see a diluted, if you will, version of your credit score. Pulling your credit for a mortgage application is calculated on a much more aggressive algorithm for computing that score. So if you see on your Credit Karma that you have a 620, then when I pull it, it may be lower. I've seen scenarios where it may be higher. It really all depends. But I'm just looking for 2 scores of a 580 when it's time to pull your credit. The DTI, we talked about that earlier today. The debt to income ratio cannot exceed 49.99%. Now, that is not something that you necessarily have to worry about because what happens, the way that I work my pre-approvals is I reverse engineer every single client that I have. So that means that when you're coming to me and we're having our initial consultation, I'm not going to be asking you how much house do you want to buy. I'm asking you what is your monthly payment that you're concerned with, or that you'd want to stay within. What's the maximum monthly payment that you'd be comfortable with having? From there, I'm able to work it backwards so we can say, okay, if your maximum monthly mortgage is $2,700 a month, then okay, this is the price range that we're going to be, and your pre-approval is then going to be the maximum pre-approval that we can offer within those parameters. So there's not going to be a scenario where I send you out with a pre-approval, I send you over to Miss Beatrice's office, and you get to your you find a house that you love only to find out that you don't qualify for your loan. I know that's happened in the past, but because of how I do my pre-approvals, this makes it pretty much bulletproof. The only thing that can really throw us off track is if something comes up with the appraisal, something comes up funky with title, things that are not within my control. And also to make sure that your DTI is calculated properly, your income and all your documents that you send to me initially are sent over to the lender, and they do a background analysis just to make sure that that the income that I have is going to be the amount that they're using, and that we're not outside of our parameters. Okay. Oh, and also, of course, 96.5% loan to value, basically meaning you're only required to bring 3.5 to put 3.5% down. That 3.5% is the exact down payment assistance that you're going to be receiving in this program. If your down payment is $16,000 and you are in Berkeley County, you're purchasing less than the FHA max loan amount, then you are going to be getting the full $16,000 at closing towards your purchase.
Austin, we have a great question in the chat here. Brianna says, is your exclusive down payment assistance only available while supplies last?
No, we are not. Great question, Brianna. No, we are not available while supplies last. This is going from January to January, year after year. This is not dependent on some kind of rogue government fund that's only here for a short amount of time. I will be running down payment assistance from now until I retire out of this business. Okay. And thank you, Ms. Beach. I'm going through my notes here, so if anybody else has a question, feel free to let me know, because I'm not looking at the chat.
I got you.
All right, good deal. Here we go. All right. Okay. Oops. One more thing I wanted to cover. The types of homes that the down payment assistance program is going to cover. We can do manufactured homes. We can do single family residences, 1 to 2 unit primary residences, and condominiums that meet HUD requirements. So this is really, really huge. I know a lot of people are just blown away by the prices of homes in Charleston. If you're looking for something a little more secluded and a little more intimate, perhaps a manufactured home, it could be something that you would want to consider. But outside of that, this is pretty much for any single family residence. If you're buying a duplex where you're going to live in one side and you're going to rent the other side out, this will qualify for you as well. And a condo that maybe you might find somewhere downtown, as long as it meets the HUD requirements, then this program would give you the down payment on that property as well. If you do have a question about condos that meet HUD requirements, get with me after this, shoot me a quick email, and I can make sure that we can talk about that more in depth. Okay, so the process. You make the decision that you want to actually buy a home. The first thing that I have to do, my primary responsibility as a mortgage broker, is to evaluate your credit, income, and assets. So we're going to have a quick little conversation about who you are, what you do, trying to get a pulse on your financial portfolio. And then from there, I'm going to direct you to a link in the bottom of my email where you're going to complete your mortgage application and your credit application. Keep in mind when you do the credit application, because I'm a mortgage broker, I do outsource that to a third party. There is a small fee involved. The so what to that is that if there's anybody else going on the mortgage application with you, then you need to let me know up front, because we can possibly get both of your credit reports pulled in a single pull, as opposed to you deciding you want to do yours now, and then later on down the road you want to bring somebody else in, because they will give you that charge again. All right. So I have all your documents. I have all of your mortgage. Have your mortgage application. I have your credit application. We got bank statements, tax returns, W-2s, you name it. Now I have enough to do my job, and that's to get you pre-approved. Based on our conversation and what you're looking for and what you're comfortable with, you're going to have a pre-approval with or without a contingency for seller credit. Once that pre-approval is ready, I'm going to send it to both you and I'm going to send it to Beatrice. And what's going to happen after that, I'm going to have a conversation with her and say, hey, here's where we're at. Please ensure that while you're out there, trying to find a home, that we do have a contingency on X amount of dollars in seller credit. She's going to give me the thumbs up salute, and then she's going to be off. And now the ball is in you and Beatrice's hands to find your house. Once you find the house and you put in the offer, your offer is accepted, you sign the documents or you sign the contract, you now have what's called a ratified contract. This is a beautiful day in the mortgage industry, because now you have a contract to buy the house that you've always wanted, right? Once you have that contract is going to be sent to me. I'm going to review the contract from page 1 to sometimes all the way to page 74. And I'm going to make sure that all of the terms of the contract are being upheld as we put together your mortgage application. Between the time that we have our initial consultation and the time that you find your house and that you go into contract, many weeks could expire. So don't be surprised if I come back and say, hey, I may need some updated bank statements. I may need some updated pay stubs. So just be a little bit flexible. Get me the updated documents, because these are going to be the documents that your underwriter is going to require anyway. And I'm just trying to be a little proactive on both of our behalves, right? Once we go into underwriting, we're going to get what's called a conditional loan approval, or a CLA. This is going to be a document that's going to highlight all of the requirements that the lender is going to have to get satisfied before they can issue your funds, before we can actually close on your deal. So I'm going to go over that list with you. And if there's anything that Beatrice needs to know, I'm going to have a huddle with her. Sometimes there may be some documents like the FHA mandatory clause in the real estate cert. Nothing you really have to worry about. It's just an additional disclosure that doesn't always get included with the lending package or with your ratified contract, but it's just something that she will be able to get signatures on, because it also pertains with the seller. Okay. So while we're doing that, we're also going to order the appraisal on the house, and we're going to order title. So the appraisal is going to be super important, because that document is going to tell you exactly how much your house is worth. You want to make sure that the price that you're paying for the house is what it's actually worth. So if you go under contract for $300,000, then we're going to assume that the appraisal is also going to come in at $300,000. If it comes in lower, then there may be some renegotiation that has to happen, but that doesn't really happen too often. What I normally see is typically when the appraisal comes in, that number is actually higher than the ratified contract, which is another element of a beautiful day, because that means you are now walking into equity. Okay. So once we get the appraisal cleared, we get the title cleared, we get your interest rate locked, we get all the other conditions cleared. Now we're going to be able to set up a date that we can actually close on your loan. And once we get to this point, that's where you and I, as the client, are going to have the conversation about anything left and what is going to be actually needed to bring to closing. And the client that I had earlier that I was telling you about, initially, I was under the impression that she had to bring around $4,000 to $5,000 to closing. But after the attorneys and the lenders scrubbed over the documents, that number like was almost reduced by more than half. So it's the numbers that I give are the only person who can give you final numbers is going to be the attorney. So just keep that in mind. Okay. Yeah, we talked about your ID, income. Yeah, we talked about all of that. Okay. Now I want to talk about some of the myth busting topics when it comes to real estate. I'm sure that if you have talked to somebody who has even considered buying real estate, then the biggest thing that they say is, I'm just going to wait until the market crashes. I'm going to wait until the interest rates drop. I'm going to tell you that this is probably some of the worst advice that you could ever hear or follow. Okay. Because you got to understand what happened. I think a lot of times buyers are just, seduced by what the interest rates were in 2020, 2022 timeframe. But you got to keep in mind what was happening during that time. We were in the middle of a global pandemic, right? So the entire economy had pretty much come to a standstill. Nobody was buying, which means nobody was selling. So in economy, what happens to what does the government do whenever the economy slows down? They have to pump life into the economy so people can start buying and selling again. So that's when you saw the time frame where they were giving out the stimulus packages. That's when you saw the time frame of interest rates dropping to historic lows, 2%, 2.5%. That unless another global pandemic happens, I'm telling you, you will never see those interest rates again. If you were to look at interest rates to where they were 15, 20 years ago, if you talk to your parents and you ask them about the interest rate that they paid when they bought their home, the answer is going to be staggering. Okay. The average interest rate, I believe this morning, it was around 6.9, and it kind of they vary from day to day, multiple times throughout the day. You should not be necessarily worried about the interest rates because you have to make sure that you keep in mind you're going to, marry the house and date the rate. So the interest rates, they are a factor, but they're not the deciding factor. And waiting for the perfect time, it could really cost you, more than you think. So here's the truth. Like I said, you want to marry the house and you want to date the rate. Rates fluctuate. They're going to rise and they're going to fall. And when they do, that's when you can refinance. That's a one-time process that can save you thousands of dollars over the life of your loan. But there's one thing that you can't really do over. You can't go back in time and buy that same house at today's prices. Because right now, as people are kind of just, sitting around on the sidelines and they are, they're waiting for the rates to drop, demand for houses is really, really building. Okay. And so let's assume that rates drop today. Guess what's going to happen? The floodgates are going to open in, buyers are going to rush in, competition is going to intensify, and prices are going to go up. And Beatrice is going to tell you, I'm sorry, but inventory is really, really, really tight. So even if you lock in at a lower rate, you could end up paying for more for the house, or worse, losing out on the house that you actually wanted. A lot of people obsess over the rates like they're the only thing that affects affordability. But to be honest with you, that's not always the case. When you buy a home, what really matters is the monthly payment, like we talked about, your down payment, and your ability to grow equity. Okay, so just keep those things in mind. And your monthly payment is influenced by more than just interest rates. It includes the taxes, it includes the insurance, and most importantly, it includes the purchase price. So if you were to ask yourself, would you rather buy a home now at a lower price and a higher rate that you could refinance later? Or would you rather wait to pay more for the house and compete with 15 other offers? it kind of the story kind of writes itself. Even if you score a lower rate later, that higher price can mean you can be paying the same or more monthly. Plus, you've lost months or years of equity and growth, and that's not going to happen while you're renting. By the way, waiting can actually be more expensive than acting. So with that being said, I actually want to switch it over to Beatrice. She's an actual realtor, and I want her to kind of explain what the process looks like from the real estate professional's point of view. So Beatrice, if you don't mind.
Of course, thank you so much for all of that great information. I mean, you were just really spot on with a lot of the information you provided in terms of the financing portion of buying a home. And financing is one piece. It's a very, very important piece. It's the initial piece that we need to consider when you're thinking about buying a house. So the fact that you're working with Austin, who is so thorough and offers this down payment assistant program, if the down payment is what's got you hung up, he can help you with that. So once we have the financing piece down pack, now it's when you come to me, and this is when the fun begins because now we're going to talk about your wants and your needs and what you're looking for in a house. And we get to kind of map out your dream home, so to speak, right? So, we'll have a conversation and I'll get to know you, what's important to you and what's important to your family. And we'll talk about the deal breakers and, the must-haves, whether that's, we're looking at your commute, we're looking at schools, we're looking at the number of bedrooms or fenced yard. So those are all of the things that we get to talk about, and I get to drive you around and show you homes. And my role as a real estate agent and what I do for my clients is I advocate for you, right? So I am your go-between what's important to you and the seller's agent. So it's so important to me to understand your goals. Okay. Because once we are synced and we're locked in and we're like, okay, I know what's important to my clients, I can go and advocate for you. Everyone loves a win-win. So my goal is not to uh, get over on anyone on the other side, is to make sure that we secure the home that you want. So and it can be really stressful while you're going through the financial process as well as looking at homes, and there's a lot of emotions involved, and I'm here to keep you focused on the go. Why is it that we're looking at purchasing a house? What does this mean to you and your future? So I will help you stay level headed and take your emotions out of that process so that we can make good decisions for you. And once we found the house that it's your home, we're going to make an offer, and that's where the financing piece also comes into play, because in that offer we're going to ask for, as Austin talked about, some closing costs, right? Because that's what your approval is contingent on. So we'll look at that, and we're always going to ask for more because our offer is a conversation starter. Okay, so that allows the sellers to come back and say, well, actually, so we're going to be very aggressive with how we do that, because we not only want to secure the house, we also want to secure the best terms for you and make sure that we adhere to those terms in your financing pre-approval. So it's important who you work with, right? So you want somebody who's going to advocate for you, who's going to know what they're doing, who's going to be a people person and not upset the people on the other side of the deal. And then you lost out because your agent didn't know how to convey your terms properly to the other agent, and then they just move on. So it's so important for you to trust your agent and know that they're going to be competent and handle that negotiation for you. Once that contract is accepted, I'm sorry, that offer is accepted and that contract's ratified, then we move into the due diligence part. And again, I am there to hold your hand because you are not a full-time agent. I am the expert in the field, so it's so important for me to keep you, in the loop of what's going on in terms of appraisal, inspections, your CL 100s with pests and termites and things of that nature, to make sure that this is the dream home, but it's also a home that is going to be in good condition and everything that you need. So that's where I am in there. And if anything comes back on those inspection reports, again, that is another opportunity for us to negotiate. Are they going to repair anything? Are they going to give us money off of the price because there are things that, came back as needing repairs? That just opens up a world to us that we can negotiate and make the terms favorable to you. And then we look at the closing process, right? That's another thing that we need to look at and talk about what to expect on closing day. And Austin and I will work closely with this. And I know it can be intimidating in terms of looking at cash to close. How much money am I really going to need? Having an additional party there to talk to ask questions, and to figure out what your next move needs to be. It's so important. And I treat every client that I work with, not as a client, but as family. How do I want to be treated? How do I want to be walked through this process? I've done it for my family, right? So I've done it for my family. I've done it for relatives and close friends. And that's how I treat folks, because this process, it's huge, it's really can be a bit overwhelming, and to have someone there to hold your hand through it, it's what I'm here for. So you're not just a number. I'm not just like, oh gosh, such and such is calling, or Brianna's calling, or Lisa's calling. No, no, no. Like this is what I'm here for. I'm here to facilitate this process so you can enjoy it and enjoy your home and not have to dread it. Austin, I'm gonna send it back to you now, unless you want to me to hint on anything else. Austin, are you there? I can't hear you if you are. I don't know if y'all.
I'm sorry. I'm here.
Okay,
Can you hear
sorry.
me?
Yeah, I was sending it back to you.
Yeah, I got I put myself on mute. I heard everything. Thank you so much.
Okay, wonderful. All right.
All right. So to make sure I'm not tripping here, is are you still seeing the shared screen here?
Yes, I'm on the screen, both screens.
Okay, got it, got it. So I wanted to swing back around to one thing before I do a recap here, dealing with your debt to income ratio. One of the additional elements I wanted to bring up was how we can maximize your pre-approval. Remember, your pre-approval is made solely by what your DTI is. That determines how much house you can afford. Okay. Now, there are certain ways that we can increase your pre-approval by lowering your DTI just by knowing some of the guidelines of the program. Now, I've been doing this for almost about 8 or 9 years now, and I've become a student of what I do. So I can tell you that one of the things that I've done is to help people afford more house is by there's sometimes there's trade lines or there's liabilities on your credit report that can be omitted that some lenders just don't know about. For example, let's say that you have a car payment and that car payment has a monthly payment of what $800 on it, $700. Let's just say $700. But you were within your last 10 payments on that particular loan. I'm able to omit that liability from your trade line and your debt to income ratio calculation, assuming that I can, one, prove that we have less than 10 months left on that particular trade line, and two, that particular monthly payment is less than 5% of your monthly income. This little trick right here has saved dozens of clients of mine in the past that were even denied before they even got to me because the broker or the lender didn't know about that. And if we're taking off an $800 payment from your overall debt, that is going to increase your buying power tremendously. Okay. Also, there are trade lines that I can omit if I can prove, like, let me put it to you this way. You have a mother and a daughter, right? The daughter wants to buy a house, but before she decided to buy a house, she bought a really expensive car. She couldn't afford it at the time, so we put it in her mother's name. Now, her mother has been making the payments on the car, but the daughter has been driving the car. This is a really common scenario, or vice versa. If I can prove that somebody else through documentation has been making the payments on that trade line for at least 12 months, 12 consecutive months, then no matter where it is on the amortization schedule, I can omit that trade line from your DTI. So those are just two of the my little trade secrets that I have, if you will, on the things that I can do to increase your purchasing power. Now, of course, this doesn't apply to everybody. It is case by case, but it's why it always pays for you to have an actual mortgage professional look at your situation, as opposed to you going into a financial institution, being denied, not being told why you're denied, and just saying that you don't qualify. No matter what happens between our conversation, I can guarantee that you are either going to be pre-approved for a house, or that you're going to have a step-by-step game plan as far as what it's going to take for you to get pre-approved. Not only am I going to give you a step-by-step game plan, I'm also going to give you a time frame. If you follow the directions on our consultation, month after month after month, by month 4, 5, 6, whatever the case is, you will be ready. Come back. Let's pick up where we left off. We'll get you in front of Beatrice, and we're going to get you guys get you pre-approved. I just wanted to circle back on that real quick. Okay. So we have talked about down payment assistance. We've talked about the types of down payment assistance that are offered in South Carolina. We talked about some of those restrictions on the down payment assistance. We talked about how sometimes those come in the form of a forgivable second, or it comes in a second lien altogether with a no payment. We talked about how that could impact your equity in the future, how sometimes it could also take you 10 to 20 years before you can have your own equity. So you have to live in that house for 10 or 20 years to use that program. We talked about the down payment assistance that I'm offering with the Blue Dawn Financial Group, and how none of these are going to be required. The DPA funds are going to be given to you as a grant, with the only requirement that you are a first-time home buyer, or you are in the police field, medical field, or something of that nature, and that you live in that house for just 1 year. 1 year is what you have to stay in the house for, and that grant, the requirements of that grant are going to be fulfilled. We've talked about the process. We talked about the debt to income ratio, and why that's the most important number that you should be tracking in your household. I would even go as far as to say that if you're married, you should know both you and your wife's debt to income ratio collectively. That's just one of the numbers you should be able to keep your eyes on. You should know how much money we owe compared to how much money that we make. You'll get so much information, and the world becomes, much bigger to you, because you have a more of an understanding as to where you are financially and how you look as a collective unit on paper. We talked again about the process. Beatrice has talked to you about some of the elements of what it takes to become a home buyer, some of the elements of a realtor, and what she's looking for, and what she's going to do for you to get you into that home. And we've talked also about how waiting around for rates to drop is just unrealistic. So please don't be that person who is waiting for the interest rates to come back down to 2 or 3%. They are never going to own a home. They are never going to be able to build equity, and they are never going to be able to tap into anything remotely close to generational wealth. So that was pretty much everything I had for you guys. I'm going to stop sharing my screen real quick, and I'm going to open it up. If anybody has any questions, I would love to hear from you. It's about 12:58 by my time. I would say if you guys had questions, let's push it to around 1:10, 1:15, and then we can wrap it up there. So if anybody has any questions, then you can speak up or drop something in the chat.
Austin, I think I will open up, and so that someone else can maybe have the courage to speak up as well. But when you talk about, first-time home buyers, and you talk about this being open to, first responders or anyone who's in the service industry, public service industry, does that mean they have to be a first-time homeowner home buyer as well? I think that's important to clarify.
Um, Excellent question. So the answer to your question is no. You need to be one of those things. So either you're a first responder, medical personnel, something like that, or you're a first-time home buyer. Being a first-time home buyer will automatically qualify you in itself. Or if you're buying your second home, then you being a first responder in the medical field will qualify you as well. Here is the fun fact about being a first-time home buyer. People who write mortgage guidelines are crazy. So what you hear is a first-time home buyer is by definition somebody who has not owned real estate in the past 3 years. So if you bought your first home and then 4 years later you want to buy another one, guess what? That's around the time that your equity should start really being able to cash out anyway, and you are all of a sudden a brand new first-time home buyer. So great question. If there's anybody else, I'm not really seeing a whole bunch in the chat. I'm gonna give us probably one or two more minutes if somebody wanted to chime in. And but if not, I thank you so much for your attention. I'm gonna put myself on mute. If anybody has any questions, I'll be here for another minute or two.
Hey, appreciate it, Austin. I have a question for you. Okay, so since you're a mortgage broker, that means you do the shopping for me, right? I don't have to go to any other loan officer. So is it true that if one of your lenders that has a down payment assistance can't approve me, that you have more lenders that we can work with?
Excellent question, Matt, and that's absolutely correct. That's one of the beauty about being a mortgage broker is that I broker through multiple lenders across the country. Um, so here's what happens. I get a client's information. Let's say, Matt, you're buying a house and I get your information and you tell me what you're looking for, and down payment assistance is the perfect answer for you. All right, cool. Now, let's just say for whatever reason, I mean, some lenders have different credit score requirements. You don't have the requirements for one, but you have one for the other one. That's just as simple as having a conversation and explaining it to you. Hey, this is going to be the best DPA program that we have going for you right now. I think this is really going to help you out. So yes, I have access to multiple lenders that have the down payment assistance program. I have multiple lenders that do VA loans, conventional loans, all type of government loans, jumbo loans, commercial loans, anything that has to do with real estate and mortgages, whether it be purchasing, refinancing, residential or commercial, I can touch it.
That's perfect. So I don't have to get you documents over and over again. I can just get them to you one time. You can go shop for me and you'll handle all the work.
That's exactly right, man. So I'm going to be able to once you give it to me, I'm the one-stop shop. I'm going to be doing the shopping for you. So you don't have to, call around or do anything. I'm doing all of that on your behalf. I'm the one that's going through the going through the frustration of talking to lots of different people, so you don't have to. So by the time I come back to you, we have a solid product, we have a solid game plan, and we've trimmed away all the fat, right? And we're ready to get you into your house.
Fantastic, man. Thank you so much for all this info, man. I really appreciate the clarity.
No problem, man. I definitely appreciate you listening in. If anybody else wants to send me a message directly, I did just drop my email in the chat, and I'm also going to drop my phone number. This is actually my personal cell phone number. Feel free to give me a call, shoot me a text. I would love to talk to each of you one-on-one. But if nobody else has any questions, I'm going to go ahead and wrap this up. This entire broadcast will be on my YouTube channel if you wanted to take a look at it again. So yeah, I definitely appreciate you listening in, and I hope you guys have a wonderful day.
Thank you, Austin. Appreciate you.
All right, have a good one.
All right, bye.